Let's get right to it. If you're watching this, chances are you've been thinking about investing, maybe for the first time. Or maybe you're looking to grow what you already have. No matter where you are on your financial journey, you're not alone in wondering what the right move is. You've saved some money, and you know you should invest, but the market looks high, and you're worried about a crash. Maybe you've heard stories of people losing big, or you're haunted by headlines warning of an impending downturn. It's natural to feel cautious when your hard-earned money is on the line. That fear of what if it drops tomorrow can paralyze you. It's easy to get stuck in a cycle of overthinking, second-guessing, and waiting for a sign that never seems to come. The truth? Waiting for the perfect moment to invest is a trap. The so-called perfect time is almost impossible to spot until it's already passed. And by then, most people have missed out on valuable opportunities. Even Wall Street pros can't time the market perfectly, so why try? The reality is, even the experts with all the data and experience in the world get it wrong more often than you'd think. Investing isn't about being perfect, it's about being present and participating in long-term growth. The most successful investors are those who stay in the game, not those who try to outsmart it at every turn. Over the next few minutes, I'll show you why waiting on the sidelines is one of the biggest mistakes you can make. We'll explore how hesitation can cost you more than you realize, and how taking action, even small steps, can make a huge difference over time. We'll break down what a market dip really is, why trying to predict it is dangerous, and reveal a smarter, proven strategy. You'll learn how to navigate uncertainty and build confidence in your investment decisions. This is about your future, your retirement, your dreams. The choices you make today can shape the life you want tomorrow, whether that's financial freedom, security for your family, or the ability to pursue your passions. It's time to stop letting fear make your decisions. Instead, let's focus on building a strategy that works for you, no matter what the headlines say. Replace fear with knowledge and a plan. Ready? Let's begin this journey together and take the first step toward a brighter financial future. Let's define a market dip. It's simply when the overall value of the stock market drops for a period. Think of it as a temporary sale on stocks. Prices fall, but it's normal and healthy. Dips can be triggered by bad news, politics, or investor nerves, but they're always temporary. A dip is a 3 to 5% drop, a correction is 10% or more, and a bear market is 20% plus down. History shows the market always recovers and climbs higher. Recognizing dips as temporary sales is the first step to becoming a confident investor. Waiting for a dip feels smart. Buy low, sell high, right? You imagine swooping in at the bottom and reaping huge rewards. But the stock market isn't like a store with predictable sales. There's no announcement for the bottom. The dream of perfectly timing your entry is just that, a dream. It's based on the false belief that you can predict the future. In reality, this mindset leads to endless waiting and missed opportunities. The market doesn't ring a bell at the top or bottom. Chasing the perfect entry is a recipe for inaction. Let's see why trying to time the market almost never works. Here's the hard truth. No matter how much research you do, you can't time the market, and neither can the so-called experts. Even the most seasoned professionals, with all their data and experience, routinely get it wrong. The market is unpredictable, driven by countless factors that no one can fully anticipate. To truly succeed at timing the market, you'd have to predict both the exact top and the precise bottom, an almost impossible feat. Think about it. You'd need to know exactly when to sell before a downturn and exactly when to buy before a rebound. That's a level of foresight no one has. While you wait for the perfect dip, your money just sits idle, missing out on valuable growth. Every day you're out of the market is a day you could be earning returns. The market doesn't wait for anyone, and opportunities pass by quickly. Historically, markets rise more often than they fall. Over the long run, the trend is upward, so waiting on the sidelines usually means losing out on gains you could have captured by simply staying invested. The best days in the market often come right after the worst. If you miss just a handful of those big rebound days, your long-term returns can suffer dramatically. It's nearly impossible to know when those days will happen. Trying to avoid losses often means missing out on the gains that follow. The fear of losing money can keep you from making the moves that actually build wealth over time. Emotionally, it's even harder. When markets crash, fear takes over, and most people freeze. The urge to sell or stay out is strongest when it should be the opposite. When the crash finally comes, you'll likely be too scared to buy. It's easy to say you'll buy low, but in the moment, fear and uncertainty make it incredibly difficult to act. The cost of waiting is real. Lost time, lost growth, and lost opportunity. Every moment spent trying to time the market is a moment you're not letting your money work for you. Instead of trying to outsmart the market, focus on a strategy that actually works. Build a plan, stick to it, and let time and consistency do the heavy lifting. Consistency beats timing every single time. Regular investing, even in small amounts, adds up over the years and smooths out the market's ups and downs. The market rewards patience, not perfection. Those who stay invested and keep their emotions in check are the ones who come out ahead. So let's talk about the strategy that actually works, one that doesn't rely on luck or perfect timing, but on discipline and a long-term mindset. The winning strategy: dollar cost averaging. Invest a fixed amount at regular intervals no matter what the market's doing. When prices are high, you buy fewer shares. When prices drop, you buy more. Over time, this lowers your average cost and removes emotion from investing. You don't have to guess the right moment, just stick to your plan. Automatic investing turns volatility into your friend. You'll welcome dips, knowing you're buying on sale. This method keeps you in the market, capturing growth instead of missing out. It's not about getting rich quick, it's about building wealth steadily. Anyone can do this, no special skills required. Consistency and discipline are your real secret weapons. Ready to start? First, pay off credit card debt and build an emergency fund. 12 months of expenses in savings. Once that's set, use your workplace retirement plan, like a 401k, especially if there's a match. Don't leave free money on the table. No workplace plan? Open a Roth IRA online in minutes for tax-free growth. Don't try to pick individual stocks. Choose low-cost index funds or ETFs. An S&P 500 index fund gives you instant diversification and strong historical returns. Set up automatic recurring investments. Start with any amount you can afford. Congratulations, you're now a long-term investor. Should you wait for a dip to invest? Absolutely not. The idea of waiting for the perfect moment is tempting, but in reality it rarely works out. Markets are unpredictable, and trying to guess the bottom often leads to missed opportunities and regret. Waiting is just procrastination fueled by fear. Every day you delay, you risk missing out on the power of compounding returns. The longer you hesitate, the harder it becomes to start. Timing the market is nearly impossible and usually backfires. Even experts get it wrong. Instead of stressing over short-term ups and downs, focus on what you can control. The real path to wealth is boring consistency, dollar cost averaging. By investing a set amount regularly, you buy more when prices are low and less when they're high, smoothing out the ride. Invest regularly, ignore the headlines, and let time work for you. The news will always find reasons to scare you, but your focus should be on your long-term goals. The longer your money is invested, the more it grows. Compounding is your greatest ally, turning small, consistent contributions into significant wealth over time. Don't let fear steal your future. Take that first step, even if it feels uncomfortable. Every investor started somewhere. Take action today. Check your emergency fund, make sure you have a safety net, and get ready to invest with confidence. Sign up for your 401k, open a Roth IRA, or explore other investment accounts that fit your needs and goals. And set up automatic investments so you never have to think twice. Automation makes investing effortless and keeps you on track. Start with what you can. $50 a month is enough. Small beginnings can lead to big results if you stick with it. The best time to invest was yesterday. The next best time is now. Don't let another day slip by without taking action. Your future self will thank you for the decisions you make today. Imagine the peace of mind and freedom you'll feel years from now. Be disciplined, be consistent, and secure your financial future. Start now. Your journey to wealth begins with a single step.